For over a decade, this man never had a losing year. That was the tell. Not a crash, not a scandal, a straight line, climbing month after month through booms and crashes alike. Flawless. And in finance, flawless is not a triumph. It is a warning. One analyst saw it. He did the math, and the math was impossible. He carried his proof to the government, not once, but again and again for 9 years. Nobody listened. This is the story of the largest lie in the history of money, and the man who stood in its spotlight while it burned. To understand the fraud, you first have to understand the trust. Bernard Madoff was not a stranger on the edge of Wall Street. He was its center, a pioneer of electronic trading, and a former chairman of the NASDAQ stock market. When Bernie Madoff spoke, the financial world leaned in. His fund was the most exclusive door in New York. You did not call Madoff. Madoff, if you were fortunate, called you. Charities, universities, celebrities, entire family fortunes. They did not beg him for spectacular returns. They begged for steady ones. And that is exactly what he sold. He called it a split-strike conversion, a careful blend of stocks and options, designed, he said, to soften the market's violence. The pitch was irresistible. Modest, reliable gains in almost every kind of weather, and the results matched the promise a little too well. Year after year, his returns rose in a near-perfect line, barely a losing month across more than a decade. Investors saw genius. A handful of professionals saw something else. Because markets do not move in straight lines. Nothing real does. Here is what no statement ever showed. Behind that exclusive door, in the split-strike fund, there were no trades. Not few. None. By his own later admission, Madoff had stopped making real trades years before, as far back as the early 1990s. The machine was not a strategy. It was the oldest trick in finance, wearing a very expensive suit, a Ponzi scheme. New investors' money was quietly used to pay old investors their returns. Nothing was earned. It was simply moved. And as long as more money flowed in than flowed out, the lie could live forever. Feeder funds, funds that gathered other people's savings and poured them into Madoff, kept the river running. Most never knew they were feeding a fire. In Boston, an analyst named Markopolos was handed a simple task by his firm. Match Madoff's returns. He tried. He couldn't. So he did what almost no one had bothered to do. He ran the numbers. And the numbers screamed. To trade the volume Madoff claimed, on the days he claimed it, would have meant buying and selling more options than existed in the entire market. It was not unlikely. It was arithmetically impossible. In 2000, Markopolos brought his proof to the Securities and Exchange Commission. He came back in 2001, and again in 2005, with a memo whose title left no room for doubt. The world's largest hedge fund is a fraud. The regulators looked, and looked away. For 9 years, the man who had already solved the case watched the crime continue, because the accused was too respected to be a criminal. That, too, is how empires protect themselves. Every Ponzi scheme shares one fatal weakness. It can never stop growing. In 2008, the ground opened. As the financial crisis swept the world, Madoff's investors, frightened, desperate for cash, asked for their money back. Around $7 billion in withdrawals came due. The money was not there. It had never been there. In December 2008, Bernard Madoff called his 2 sons into his apartment and told them the truth. The business was one big lie. They turned him in. On December 11, 2008, the FBI arrived. The most trusted man on Wall Street was under arrest. The statements he had mailed to roughly 4,800 accounts showed a balance of nearly $65 billion. But that number was the fraud itself, swollen with profits that were never made. In March 2009, Madoff pleaded guilty. That June, a judge sentenced him to 150 years in prison. A number meant not as arithmetic, but as a verdict on a life. The real wound was smaller than the headline and far deeper than any number. The money truly handed over, real savings, is estimated near $17.5 billion. What came next was almost as improbable as the crime. A court-appointed trustee spent more than a decade clawing money back from those who had taken out more than they ever put in. By the end of 2024, victims had recovered around 94% of their proven losses, a result almost unheard of in frauds this size. Almost, because some losses never return. Retirements erased, charities shuttered, and trust, the very thing Madoff sold, gone. He died in prison in 2021, still unable to fully explain how one man had fooled the smartest rooms in the world for so long. The answer is uncomfortable. Madoff did not hide in the shadows. He stood in the light, chairman, pioneer, pillar, and dared the world to doubt him. And the world, flattered to be let inside, chose not to. The most dangerous lies are not whispered by strangers. They are signed by the people we have already decided to trust. Subscribe, a new collapse every week. Because this is how empires fall, not when one man lies, but when